Welcome to the Marsh McLennan Global Risk Report Launch India event. We will be starting the event shortly in close to 1 minute. We can see a rapid rise on attendees joining. Close to 100 people have joined, and we expect around 250 plus joinees shortly. A very warm welcome to the Marsh McLennan Global Risk Report 2022 launch event. I am Sanjay Kedia, Country Officer for Marsh McLennan in India, and we have our leaders of various businesses and Carolina Kent, Managing Director, Risk Management Leader, Continental Europe with us. I'm not going through the Zoom operating instructions, which all of us know, but a very important point that we look forward to your participation, your questions and comments. You could choose to raise any of questions during any time of the entire discussions using the Q&A tab. We also encourage you to raise your hand if you want to speak live, which will encourage in the question answer session, which is kept towards the end. We have some live polls going on, which will be very useful when all of us you participate. I'll do a quick introduction for our speakers for today. I'm very pleased to have the chief guest, Sri Saurabh Mishra, Joint Secretary, Department of Financial Services with us. He is on leave, but has been very kind enough to grace the occasion. Last year also, he supported the event by giving keynote address, and we have him this year again. I already introduced Carolina Clint. We also have Arvind Ladda, the CEO of Mercer India, and Aarti, the partner for Oliver Wyman India. With this, I invite our chief guest, Sri Saurabh Mishra, to give the opening remarks. Thank you very much, sir. Over to you.
Thank you so much, Sanjay. And I am extremely pleased to see this conference being in motion. This is such an opportune time when we are defining and describing risks. And when the World Economic Forum joins hands with the Marsh McLennan, it automatically invites some of the best minds working on it, both in terms of understanding risks through the extrapolation of the loss data and the related risk models that they create, as well as in terms of collaborating and interacting with some of the best brains through the surveys on how the risks are playing out across the world. As we all know, colleagues, pandemic has really thrown open a series of challenges that we all are grappling with as a world, as a community. And India notwithstanding, being an exception on that, I think has its own set of pangs, perils, at the same time its opportunities. One thing is for sure that while we are talking about the headline risks, which automatically connects to pandemic like this, to the climate risk and the climate actions around that, the geopolitical risk and the actions around that, and in general, the risk which connects one country to the other, either as cohorts of the countries or world across as a community. My sense is that as we keep going further, it's important that risk professionals not just do their duty of understanding, assessing, and engineering those risks and the models around that, I think it's time to take a step forward and make the world a risk community, which means that it becomes an onus for all of us as the risk professionals to not just really try and connect to each other, but start democratizing the concept of risk, the value of risk, and therefore the management and assessment of risk. I think this is excruciatingly important in each of the areas that you're talking about, in each of the communities that you're talking about, cutting across corporations, countries, and individuals alike. From health risks to climate risks to life risk, as well as in order to create some of those complex layered environment in which such risks are progressing and creating up their own kind of dimensions. It's important that we all remain connected to us and to each other as a risk community and take this mantle forward. As regards India, I think all of you are connected to the kind of play that India witnessed. I also have got a great satisfaction in saying that while pandemic had really its own effect, we tried to fight with it as a country better than many in terms of the size that we carry, in terms of the geography that we carry, in terms of the challenges that we had, in terms of the migration that we saw in the wave one, in terms of the paralysis that we saw in many of the industries. I think there was a concerted, coherent response that could really be generated from the legislative side to regulatory side, as well as to the public at large. And last but not the least, the industry, which really came up to serve to the next level. I also feel that as a country, India has kept its sincerity, its allegiance, as well as its accountability with regard to certain actions to turn green as much as one can in the kind of path which has already been defined by the Honorable Prime Minister on the net zero side of it, as well as on the climate action side of it. I also feel that some of the energy-related areas in which India is transitioning to the better energies, to the green energies, and those areas on electric vehicle or the renewable leverages that we are making. I think India is absolutely ready to join hands with the world in terms of taking the mantle forward as a responsible, sizable country that we are. Last but not the least, I once again exhort all my risk communities to take this mantle forward in terms of trying and understand what are the risks that lie ahead of us, and then try and create an environment which is to solve those risk problems, and B, to democratize it as much as possible. I really wish this forum and this important session of risk professionals all the best, and wish to stay connected in the times to come. Thank you so much.
Thank you so much, Mr. Mishra. Really, really appreciate your words of encouragement and direction that all of us needs to understand, assess, and prepare ourselves for better solutions to these risk issues is really motivating. And we once again thank you. We now move to some live poll questions for all our participants. The first poll question, please take your time. Very important to get your views right. What do you foresee as the biggest concern for your business in the near term, that is between 0 to 2 years? It's a single choice question. Take your time. Whatever appeals to you most, pick it up. I know there are more than one risks which appeals to you, but restrict it to one choice. Okay. We have a cybersecurity challenge emerging as pretty strong, severe mental health deterioration, and supply chain risks as well, including the debt crisis in large economies. Next question, poll question 2. Looking at the medium term, that is from 3 to 5 years, what in your opinion will be India's biggest area of concern? That's for our country, for India, in 3 to 5 years. Let's roll the options. Can we roll the choice of the answers? Yeah. Yes. We have cybersecurity challenge again, debt crisis in large economies, extreme weather events, and climate action failures emerging as some of the top risks for the India. Close. With this, I now hand over to Carolina Clint, who will take us through the summary of the key findings of the Global Risks 2022 report. Carolina, over to you.
Thank you so much, Sanjay. So I am joining you today from Stockholm, Sweden, and I am here to give you a macro perspective and share some thoughts on what the emerging risk landscape means for companies and organizations, and connected to the themes identified in the Global Risks Report 2022. And as you may know, the Global Risks Report is produced every year by the World Economic Forum with the support of Marsh McLennan. And the report provides perspectives on major risks to global prosperity, including economic, environmental, geopolitical, societal, and technological risks. It is the 17th report, and it is rooted in a survey that tapped into 960 experts from across the world. The overall central theme of the 2022 report is divergence, and it discusses COVID-19 and its variants, economic recovery and industry trends, and geopolitical shifts that are affecting individuals, companies, and countries in very different ways. The report then goes into deep dive chapters, exploring 4 different areas of emerging risk: a disorderly climate transition, cybersecurity, migration pressures, and competition in space. And then there's a final chapter that looks at resilience lessons and how now, 2 years from the onset of the COVID-19 crisis, the actions and behaviors of all stakeholders will determine how quickly the world recovers and embeds the resilience needed to prepare for the next major shock. Short and medium term, respondents to the Global Risks Perception Survey signaled societal risks in the form of social cohesion erosion and livelihood crisis as most concerning, in addition to environmental risks. Longer term, over a 10-year horizon, the health of the planet dominates concerns. Environmental risks are perceived to be the 5 most critical long-term threats to the world, as well as the most potentially damaging to people and the planet, with climate action failure, extreme weather events, and biodiversity loss ranking as the top 3 most severe risks. Infectious diseases are ranked 5 on short-term risks, but doesn't make up the top 10 categories, medium or long-term. Technological risks, such as digital inequality and cybersecurity failure, are not on this slide, but made the top 10 list as critical short and medium-term threats to the world, according to the survey respondents. They do, however, fall back in the rankings towards the long term, and none appear among the most potentially severe, which, according to the report, is actually indicating a possible blind spot in risk perceptions. Comparing these results with the World Economic Forum Executive Opinion Survey, which is also connected to the Global Risks Report. And this survey had responses from 12,361 business executives from 124 countries around the world, who were asked to give their opinion on the top 10 critical short-term threats to their country when conducting business, out of a total list of 35 risks. From a global perspective, you will note that awareness of spillover effects of the pandemic remain, and economic risks, as reflected here in the top 3, are still main concerns. Results for technological risks seems to reflect more concern with accessibility and less with vulnerability. So digital inequality, which is a new risk this year, is reflected in the top 10, while cybersecurity failure ranks number 11, so you can't see it on this list. But both environmental and economic risks take up 3 spaces in the top 10 and 2 spaces in the top 5, as you can see. So what does this mean for us? Well, one thing is clear. It is not enough to consider the day-to-day risks of doing business anymore. Planning to be resilient in the face of the unexpected is more critical than ever. We're going to take a quick look at a couple of different aspects. The climate crisis remains the biggest long-term threat facing humanity, and we continue seeing temperature and sea level rises, extreme weather events such as wildfires and catastrophic floods worldwide, which are compromising critical infrastructure, crop production, and the livability of many heavily populated areas. Climate-related risks are also really amplifying growing tensions coming from trade, geopolitical, and domestic conflicts. As we saw at COP26, individual countries and industries are responding to climate risks in different ways, which are going to have cascading effects and may create some new challenges. And some examples may be the formation of climate agenda blocks and global challenges arising from the differing interests of these blocks, or economic disruptions related to the adoption of sustainable tech. The rise of stakeholder capitalism and shareholder activism and increased appetite from companies to use ESG targets and metrics, also combined with ESG-based investments, is really reshaping the financial and economic landscape. And an increasing number of organizations are now committing to decarbonize their operations. And businesses really have to pay attention to transition risks, such as rapid shifts in policies and regulations, the need to develop low carbon technologies, and also changes in consumer behavior and investor preferences. And this area will continue to develop quickly. On digital risk, we were always becoming highly dependent on technology even before the pandemic. But over the past 2 years, we've really seen an accelerated digital transformation across public and private sectors. In addition, companies are under more pressure than ever to digitize and automate. But very often, this is built on the backbone of aging technology and insecure network protocols, which has led to supply chain disruptions and greater exposures to cyber attacks, especially ransomware. And we are at the point now where cyber threats are growing faster than our ability to effectively prevent and manage them. Space is more accessible than ever, and in 2021, we saw a record number of 145 orbital space launches globally, and 70,000 launches are planned for the next decade. Space tourism got off the ground, and the first commercial space station was announced. These are all really exciting developments, but at the same time, we are seeing growing geopolitical tensions and an increased risk of harmful space debris. Our planet is surrounded by a literal junkyard of human-made space debris with empty fuel tanks, broken satellites, nuts and bolts. And given that they move around Earth at more than 18,000 miles per hour, which is 7 times the speed of a bullet, these objects pose a serious threat to space infrastructure and the future of safe space travel. And it could also pose an environmental hazard if they fall back to Earth without burning up on re-entry. So any business that rely on space infrastructure, and by that it could even mean fast, reliable internet, should consider the impact of supply chain interruption caused by space risks as the commercial race to the stars really intensifies. And to summarize, many businesses have been struggling with how to survive and build resilience in the past 2 years. And I think we're learning now that in past times, we may have rewarded efficiency over resilience and growth over sustainability a little bit too much. So in past times, the relative predictability of the business environment has enabled companies to pursue efficiency. That has, of course, helped fuel exceptional profit growth. But that focus on efficiency has also left some companies a little bit too lean and more vulnerable to shocks. So what we've seen is that companies that have allowed a little bit slack in the system have had the resources to bounce back quicker. Resilience is a journey, it's not a destination. And resilience measures should focus not only on a company's own assets and processes, but also the vulnerabilities of those in the supply chain, utilities, service providers, suppliers, and also customers. It's important to take a holistic view of operations and strategies. So don't just dust off the risk register of last year, but take a fresh look at climate risks, cyber risks, emerging technologies, geopolitical risks, and how those could potentially impact operations. Bringing a diverse group together to think about this also helps companies better understand and reflect the markets they serve. And it enables companies to take a holistic view of the emerging risk landscape. So putting diversity and inclusion high up on the agenda is actually one way that you can drive sound risk management and relevance and long-term resilience. And finally, of course, look at the lens and these risks through whether it's possible to align overall strategies with the direction of change and capture the opportunities that come with it. Connecting risk with strategy is really key. Thank you so much. And we're going to run a poll question before we head into the panel discussion. So please, if you could take a moment and consider this question. Which economic concern represents the greatest threat to your industry in the near term, which is between now and up to 2 years? All right, we have a response here. Wonderful, drastically changed consumer behaviors. I agree, I think that's a very good choice. Disruptions in supply chain, absolutely agree. This is something that everyone needs to be aware of and really think about how to address. We also have changing trade patterns, restrictions in cross-border movement. Yeah, this was interesting to see. Thank you so much. All right. I'll hand it back to you, Sanjay. Have we lost our panel discussion host?
Just the thought that was going through my mind, Caroline. But while we wait for Sanjay to come back, you've conducted and you've spoken to audiences around the world. Any reflections on differential trends that you're seeing in India as against what you saw from the poll today?
You know, I was actually really pleased that cyber threats ranked so high in the first 2 polls that we did, because I do think, given the fact that the report points this out as a potential blind spot and something that companies might not be aware is a really emerging risk and something that will evolve quickly. I thought it was really encouraging to see that in India, it seems that this is high up on the agenda. So I thought that was really good to note.
Yeah.
Sandra, you're back.
Yeah, I was very much there. I was able to listen to all of you, but somehow I remained on mute. So thank you all. Thanks, Karelina, for the excellent summary. We have Arvind, leader of Mercer, and Aarti, leader of Oliver Wyman, both also on the panel. And appeal to all the participants, which we have over 220, to keep raising their questions and comments while we kickstart our panel discussion. And Karelina, I'll go back to you to start with. You already summarized some of the points, but let's again zero down on the same question, which might be in the minds of a lot of people over here, is what are the emerging risks that organizations need to prepare for, what they could prioritize, and how does the resilience for those risks look to you in today's environment?
And I think this last poll here was actually really interesting. I think supply chain is one of those risks that organizations need to think about and prepare for how to manage. I definitely think cyber needs to be up there. And thinking about resilience, resilience will mean different things to different companies depending on the nature of their operations. But generally speaking, it's always a good idea to take a step back and try to plan for the unexpected. So companies need to be more rigorous in identifying and assessing potential sources of disruption and what that means for their business against the backdrop of constantly changing risk landscape. And I think what we've been able to see is that highly resilient organizations really demonstrate a mastery in risk anticipation. And it's about creating and cultivating a culture of collaboration and also learning the right lessons from past experiences. So organizations that connect risk to their long-term growth strategies by really embedding risk management into business planning, that is really a way to cultivate and develop sound resilience in this business context that we're seeing now.
Thank you. Aarti, there was a lot of discussion. There was a lot of poll on digitization and cyber as a risk. How do you see this risk evolving? And what can organizations do to better prepare?
Thanks indeed, Sanjay. What we are seeing most of our clients do is actually much more focus on the entire operational risk universe. Cyber is one of these topics. There's much more emphasis now on digital risk. A lot of our clients have partnerships, for example, as a growth driver. So there's much more focus on third-party risk and so on. So one, I'd say the big theme is around just recognizing and more emphasis on the entire operational risk universe. Secondly, specifically on cyber, we are now seeing this topic being discussed at the board level, right? So across the organization, there's a review on are we doing enough on cyber risk? From the right governance and organization, do we have the right understanding of what is our cyber risk tolerance? Do we have the right risk mitigation in place? Do we have the policies and processes in place to identify, respond to such risks? What is going to be our strategy around communication, external relations in the event of a cyber risk event? What is our approach to reporting? And definitely much more emphasis on the entire risk assessment for cyber risk. So we are seeing organizations not just do this, as a one-off exercise, but continually reviewing themselves across all parameters, starting right from the top, organization, governance, right down to processes, policies, reporting, communication strategy, and doing this in a much more strategic way.
Thanks. Arvind, not only these surveys, but many other surveys are continuously throwing mental health risks as one of the top issues which organizations are facing, multiple waves and still uncertainty on the future. How do you think organizations can better tackle these whole mental health risks?
Yeah, I think while one can't call it the upside of the pandemic, one of the things that the pandemic has done is shown light on the need for better mental health and well-being. I think a lot of societies, including societies like India, speaking about mental health or mental deterioration of mental health was not something that people took to very easily. And our poll today, the first one showed that audiences today, thought leaders today saw it as the second highest risk. Even the global risk report, which surveyed both HR as well as risk managers, showed that 79% of them thought that deteriorating mental health can have a significant impact on business. In fact, both on likelihood and severity, this risk scored on 3.3 on a scale of 5, which is a very significant number. So that's about the current state of mental health deterioration or the risk of mental health deterioration. The good news is that proactive organizations have started to address this at multiple levels. I would start by saying just making accessible programs that help their colleagues develop the skills that are required to tackle mental health challenges, right? Be it through increased communication, be it through access for resilience building, be it for mindfulness. Then there is the question of access to programs such as EAPs, de-addiction, and a host of those. But just offering programs is not enough. You need to create a culture where it's possible to support each other, and therefore training for managers, training for peers. And then as we look to return to office, right, look at how we can extend some sort of flexibility, sabbatical, thoughtfully return to what we hope will be a new way of working that builds on this. And the last thing I'll say is, while businesses need to show resilience, leaders have, and more thoughtful leaders have shown that resilience is not necessarily the opposite of vulnerability as individuals. They have come up and spoken about their own vulnerabilities and their own mental health issues. And I think organizations like these allow for employees to thrive despite all the mental health challenges. So that's what we are seeing in the landscape.
Thanks, Arvind. I'm sure there's so much to reflect and see the change in this area. And certainly this could be a positive upside if organizations do adopt these changes. So wonderful to hear everything what you said. Kerala, back to you. We have seen many countries and organizations pledging to the net zero. The Indian government also made commitments, and that was also a very positive welcome. What are the risks that individuals and organizations that are committing to these run, and also in this whole transition? How do you see this journey and the risk involved?
Thank you. I think it's going to be a bumpy road. I mean, if we think about it, COVID-19, it briefly changed the climate conversation because people stopped traveling and the carbon footprint for many decreased significantly. But at the same time, as individuals stopped traveling for a while, cargo continued to be shipped around the world and manufacturing has continued, right? So I think the climate change conversation is far from over. And I do think that nature-related risks are undervalued in business decision-making. I think we have to recognize that the destruction of nature will inevitably impact bottom lines, right? And at the same time, regulators are now pushing more and more for corporations to take more responsibility and measure the climate change mitigations in a transparent and public way. So I think, again, businesses have to pay attention to the transition risks because there will be rapid shifts in policies and regulations. And there is such a pressure to develop better, more low carbon technologies. And also, of course, the stakeholder capitalism, where investors, consumers, employees are going to put increased pressure on companies to do the right thing. And I think companies also need to pay attention, of course, not to end up in the bucket of greenwashing when they say something and don't necessarily deliver, because that's another risk which is going to impact their bottom line quickly if they're caught out doing something like that. So I think it is a very interesting, it's an interesting and very quickly developing area that everyone just have to think about how they manage. And I think for individuals, of course, it's about making choices, right? It's about thinking about the own impact that we have on the environment and how we can make better choices as we move forward.
Aarti, coming back to you, I know Oliver Wyman does work with a number of banking and financial services clients in India and globally. How do you see these emerging risks impacting this industry and sector?
No, Sanjay, it's actually fascinating. Carolina, when you share the horizon, the time horizon, and where you see different risks being in focus, the furthest out or the long term are much more related to environment and climate, right? But the good news is that we are seeing some of our clients in the financial services sector already begin to recognize this. When we talk about banks and we talk about financial institutions, they are also thinking about the long-term risks and not just the short-term ones. Recently, we released, as a part of the Glasgow Financial Alliance for Net Zero, we brought together the largest asset managers across the world, the largest asset managers, insurers, banks across the world, to carve out a path for the financial services industry. Now, in India, we are beginning to see banks trying to understand their portfolio from a climate perspective And then this will form the basis of, what long-term actions these banks take. Coming closer to the near term, as we mentioned, the near-term risks are much more focused around societal change, changing consumer preferences, which was also on the list there, is very, very important for banks, right? Because the consumers are now exposed to a much more digital way of engagement. So how do I, improve my own processes? How do I differentiate, my customer experience? And at the same time, how do I manage the digital risks? So these are really what we see the financial services institutions being focused on.
I'll come back to you later, Aarti, but I'm quite curious. Maybe you can would like to respond. How do you see the looming debt crisis, which is also there on the top risks in some of the horizons, being worried for the banks or not so much?
I'll try to give an unbiased answer here, Sanjay, as best as I can. I do think where we are in India, the opportunity kind of far shadows over, the risk. There is so much growth ahead of us, and of course, there's got to be a lot of investment that needs to go behind this growth. So I think, given where we are in our evolution cycle, the opportunity is far bigger, and most of our clients are actually seeing, especially after the budget, this being the beginning actually of a cycle where private investment also takes off. So the banks are now looking to come back and lend in bigger ways than before.
That's really good to hear, this optimism and positive approach. And Arvind, the global risk report, as Karuna listed, is also showing a risks of widening digital gap, skill gap, learning gap. And how do you see this impacting the future of work in the organizations? In fact, if I was to drop on a question from one of the participants, Navneet Surana, he talks about there's also a talent shortage risk already looming because of digitization and various other initiatives, particularly in the IT industry in India. So maybe you like to respond to both of them.
Yeah, I think, Sanjay, what we've seen is that the technology or the digital journey that businesses were already on has just accelerated very sharply. And everything to do with technology and everything to do with digital has probably arrived much earlier than we first expected it to. Right?
Yeah.
Organizations realize that they don't have a choice but to keep pace with this fast changing technology landscape. And yet our survey shows that 2 out of 5 HR leaders did not feel confident that they could have a full assessment of the skills their workforce has. And about half of them were not able to put together an outlook on the skills capability that is required. But we have to contextualize this in the frame that this has been such a rapid movement that organizations may not have had an opportunity to prepare for it in advance. What, however, we have seen over the last 6 months to 1 year is organizations are now looking at strengthening their skills libraries, right? Have a better repository of all the talent they have. Some of them are going so far as sharing insights with colleagues on the skills in demand, how colleagues could acquire those skills, get assessed for them, and then where appropriate, actually pay them differentially, right? So this is what organizations are doing, but this is not enough, right? I would go so far as saying that this is not about reskilling colleagues, because the skills landscape and the technology landscape could have changed very substantially, right? Or this is not about upskilling, but actually reskilling colleagues, right? This is not just about skills, but this is also about jobs. How do we look at jobs? And maybe some jobs that are going to be impacted by automation, those colleagues need redeployment. So organizations are looking at how can I redeploy them? And the last one I would say is larger organizations realize that they also have some sort of contribution to make towards society. So we've noticed large organizations now undertaking CSR in the area of skills development. To the question that you raised, and I think that one of the audience asked us about skills and talent shortage. Of course, I think 2 years ago, not 2 years ago, but I would say about 18 months ago, workforce was worried about job security, and today they are spoiled for choice. Right? How far this gap will widen before we start bridging it remains to be a question that's yet to be answered. I think I'm extremely hopeful that through the course of this year, we will see some closing in that gap and some stability in the workforce. But organizations that invest in the careers of their people, in developing the skills and the careers of their people, they are a little ahead of curve in terms of being able to both attract as well as retain. I think that's the reality that we face today.
Lovely comments, Arvind. Leaders are grappling how to deal on the talent issue. So a lot of interesting points you brought. Let me go back to Carolina and ask this entire 2 years of pandemic, how are you seeing, Carolina, this whole issue of risk and resilience in the organization? Is it getting more prominence, more different focus? How corporates dealing with them? The whole issue of risk and resilience.
I think it's a great question, because I have to say my observation is that the pandemic has changed the way we think about risk and resilience. And I think the reason is that we have all had an opportunity to learn firsthand that low frequency, high severity events, they do happen. And also that the impact can be quite sudden and very dramatic. Right? So the lesson here is that something like a pandemic, something that has been deemed as low frequency, high severity, is not just a scenario for a tabletop exercise, but something that we should expect and really have to plan for. And I think, many businesses are grappling with how to build resilience or maybe even survive still in the wake of the pandemic. But it's not only in relation to the pandemic impact, but they're also coping with an increased number of cyber attacks, catastrophic climate events. So it is a very complex environment to operate in right now. It is interconnected, it's volatile, it is difficult. And I think one of the things that we've seen is that more senior leaders and boards are very interested in understanding risk and resilience to a very different degree than in the past. So I think in many ways, it is the heyday for a risk professional, right? This is our time to shine and to bring risk forward and make something, have a meaningful impact on businesses and also on societies. So from that perspective, I always try and find the silver lining. I think, it's an opportunity for us.
Thank you, Elena. Continuing on the same theme, we had a question from one of the participants, Saurabh Majumdar, which Aarti has agreed to make some remarks, is risk management really happening in reality? There's a view that organizations responding to issues that is burning or live rather than really preparing themselves. And these risk things are more confined to risk registers or with compliance department rather than affecting the real lives of business leaders. So it's a one view, and he wants a reaction. So over to you, Aarti. What's your reaction? How are you seeing?
No, thanks for that, Saurabh. I think it's a fair observation. Maybe this would have been true a few years ago. However, now we are actually seeing more and more of demarcation, emerge across our clients and our organizations. There is much more an appreciation for risk actually being a strategic choice or a part of the overall business strategy. We are seeing some of our financial services clients, for example, not just define risk appetite and risk tolerance statements, but then also link this to top of the house business decisions and limits and so on. We are seeing many of our clients cascade this right down across teams right at the ground level, so that there's much more an awareness around risk, both financial and non-financial risks across levels. And some of these clients have also, begun seeing the benefits of doing this, that the business actually takes much more of frontline role and takes ownership. And the risk function, therefore, is not relegated to being a control function. The risk function's job is not only to stop, let's say, bad loans from coming in, but risk becomes much more a strategic partner and also saying what should be the overall business strategy.
Aarti, if I was to add my own observation, when I have engaged with host of customers across different industries, I would like to say that I do see a positive change, particularly with the owners, promoters, or at the top leadership. But I would tend to agree with the participant that the percolation may not be as wide with many clients, but certainly in certain clients, yes. So the COVID I'm seeing a change when I interact with a lot of customers and discuss the risk issues, but there's still a lot of ground to be covered. So I would like to concede the participant, but yes, at the same time, I agree with Kiran and you that the change is there and it's visible, but the journey to be made is still quite big. So thank you, Saurabh. I think sometimes it's good to have these. And now we have more questions coming in, and I would encourage everybody to, if you have questions, please do share in the Q&A tab. And if you want to go live and ask questions, please raise your hand and we'll try and unmute your line and put a spotlight on you live. So I have a question from Rajat Ranganath. Climate action failure is already manifesting rapidly in the form of droughts, fires, and so on and so forth. What is a major positive step taken at any forum recently in this direction? Some good news. What do you think, Karan? I would like to share. What's happening?
Yeah, I think the good news is that the world as a whole is more focused on climate change and the actions needed to try and turn this big ship around, right? So I think we've seen, of course, some friction and not really a clear aligned strategy at COP26. But I mean, overall, at least we have attention to this matter now. And I think it's also quite clear from the Global Risks Report this year, because, inaction to address this risk is very much highlighted as a future risk. And I think also looking at how the colors change, if you just look at how the rankings change over time, you will see that it is a top matter on the agenda of leaders across the world now. So I think it is, I'm still hopeful that we will be able to work together to make some meaningful impact, even though I will also admit that the impact that we need to see is yet to be seen, right? So we're at this turning point now, and I just hope that it's going to start resulting in some something more visible and something that we can also celebrate.
There's an interesting question. From all these risks we see, there's some opportunities, hopefully. And what are the top opportunities in the near future? Anybody wants to give a shot? What's come to the top of your mind? Top opportunities.
So I would say, Sanjay, change is oftentimes first disruptive, and then as one reflects, one can look at change from an opportunity perspective, right? The fact that so many things are changing, the ways organizations deal with not just talent, the way business is being conducted, the way we interact with customers, the fact that despite all the disruptions, digital and technology will help the world become one large community in ways that it may not have happened earlier, gives organizations a challenge to rethink how they operate. And those that are able to sort of push ahead don't have to necessarily follow the path of others before them, but actually create their own paths. And therefore, organizations that are ambitious have a clear strategy of what they want to do and what they're and the problem that they're trying to solve or the value that they're trying to add. I think for them, it's an opportunity to reframe how the game is played. But Carolina, Aarti, anything you would like to add?
Yeah, I think from my perspective, it's about the opportunity for improved collaboration. I think you just look at the unprecedented development of vaccines and how quickly that went, which was really the effect of public-private partnerships and increased collaboration. And I think the pandemic has been a wake-up call to understand the global risk landscape as an ecosystem with potentially intersecting risks, and navigating the disruption and building resilience really creates opportunities for governments and businesses to better partner. And I think that's, to me, is actually good news.
Yeah. I'll add 2 points. I think there is a huge opportunity that we are seeing due to changing consumer behaviors, right? I think what the pandemic did is kind of accelerate digital adoption. Maybe, over in a very short span of time, we've crossed many years, what would have otherwise taken many years. So we are seeing now more and more businesses look at this as an opportunity. Look at this as an opportunity to launch new products or to find newer ways to engage with customers. The second one that we see is probably linked to Carolina, what you said, is a much more open mind towards partnerships. Partnerships as a way to grow, and partnerships, which are seen as more strategic in nature than they've ever been before. So those would be the two trends to also highlight.
Thank you. We have questions pouring in, which is great. I'll pick up a question from Neha. She asks about what can leaders do in terms of striking a balance between flexible working, that is working from home, and the need for culture and need to come to office for, cohesion, engagement, and collaboration. So there are both these models and how to strike a balance between the two. Arvind, I'm sure all your customers would be grappling with this choice of returning back to office or working from home, and where's the balance?
I think this is a sort of difficult one, right? This is a question that I think organizations have applied their mind to for more than 12 months. I would think that early 2020, when a lot of organizations felt that it was now time to start thinking about returning to work after having been in the pandemic for about 9-10 months and things looking up. And then suddenly, especially in India, we got the jolt. So this is a much debated topic, and yet nobody knows where the magic sort of balance is. What we are seeing organizations do is invite feedback and thoughts from colleagues in terms of what they think might be useful ideas in terms of how to return to work. Because if you include them in the dialogue, then there's a chance that what you come up with will be seen as more inclusive and responding to various aspects that might make a difference to them. What we are also seeing organizations is focus on inclusivity, because the times of everyone being the same meeting room, everybody coming to office every day, they are certainly behind us. So how can you ensure that those that are not physically present in the office don't feel excluded? Those that are not in the meeting room physically but have joined virtually, they don't feel excluded. And then it's about training managers on how do you evaluate performance, not based on presence, because a lot of us have had this opportunity to look at people work around us and then come up with an assessment of their contribution. Now that opportunity is not there. And nor do we have an opportunity to understand their full, the ecosystem in which they are working. They're not working in offices, they're working from home. We don't know what's happening in their background and what's going on in their personal life. So I think inclusive is probably the overarching word as organizations are looking to return.
Thanks, Arvind. There's a question from Ankur on the pandemic has highlighted the issue of protection gap, and especially from natural events. And we saw in the global risk report a lot of highlight on the risks to the world in terms of extreme events, weather, and so on and so forth. How do we see the role of insurance and reinsurance and reducing this protection gap on the solution side of it? Because that's a big risk on the long term and also in the midterm. How do we see insurance helping the world and the society on the protection gap? Anybody wants to make any comments on this?
Sure, I can start. I think it's a really good question, and I think the pandemic has really helped put the spotlight on the fact that these systemic losses are really tricky for the insurance industry to carry on its own, right? So there is a protection gap, and I think the magnitude of simultaneous losses around the globe, and also connected to that, the complexity of trying to predict government containment decisions and changes in consumer behaviors, it makes the risk really impossible for the insurance and reinsurance sector to assume alone. So as a result, I think insurers and reinsurers now are really looking to add exclusions of pandemic risks because they're not really sure how this impacts their bottom line, right? So what we've ended up with is a protection gap. And I think probably a public-private solution for pandemic risk, for example. I mean, it could be something else. It could be climate risk as well. But involving the insurance sector could offer many benefits because, of course, the insurance sector has a lot of experience and can distribute funds in a very structured and efficient way. But maybe then also help the insurance industry to have the predictability about their access to funding to a different way if you have a government backstop, for example. You could think about capital markets providing a source of additional funding capacity through insurance-linked securities market or something else like that. And I think that goes not only for pandemic risks, but also other kinds of systemic risks. But I think insurance and reinsurance will continue to play a really critical role, but it cannot be the only answer. And I think as a whole, we have to focus more on risk identification, risk mitigation, risk management, and also, of course, looking at risk transfer, but also other ways of finding capacity to fund these events when they happen. And they'll happen more often. So it's my 2 cents.
Yeah. Good. We have some more time, and let me throw open to all of you. If you were to look at 1 or 2 key messages to all the participants on what they can do better on managing some of the top risks emerging from the global risk, or any learnings you would like to share, I'll just move around to all 3 of you as closing remarks. Maybe Carolina, you could have a last word, and I could start with Arvind, then Aarti and Carolina to end the session. And in case there's any interesting question comes up, I'm happy to pick it up again. So Arvind, over to you. Any quick closing remarks from you as a message to all the participants?
I would just say that agility of organizations and agility of talent, investing in talent on an ongoing basis and creating agile organization frameworks so that you can continue to respond to the marketplace and to what happens in your customer's life are the 2 things that one should focus on.
So it's not the biggest, but the most agile species which will survive. So absolutely. Darwinism, great. Darwinism still holds. Aarti.
That's that's very inspiring. So I think I'll tie it back to the medium term or the near term as well as the long term. Our key message is the near term and the medium term. Let's take a strategic view. Let's not take a tactical view around risk management. This can be a differentiator for business outcomes. At the same time, let's also keep an eye out for long term, especially as we talk about things that will impact long-term outcomes for the entire planet. Let's also keep an eye and start forming our strategies around that.
Carolina, the final words of wisdom.
Oh, wow. Thank you so much. So I would probably say that there are 4 steps to consider when thinking about how to improve resilience. Number 1, anticipate risk and really expect the unexpected. Don't just dust off the old risk register. Take a fresh look and try to be creative when you think about risk. Step 2, integrate risk. Connect risk to strategy. Really critical. Step 3, close the preparedness gaps. So make sure that you don't have gaps in your perception of preparedness. And step 4, measure what matters. Use metrics. It's going to make you stronger.
Thank you. Well, wonderful takeaways. Thank you all the panelists, and thanks all the participants for holding up and participating. We started the event on time, and it's good to end the event on time. Thanks once again, and the copy of the Global Risk Report edition is available on our websites and with any of our colleagues at Marsh McLennan. Thank you all. Thanks once again. Bye-bye. Have a good evening.
Thank you.
Thank you.
Thank you.